But my next guest says if you want to know what's really going on in the retail sector, watch Tractor Supply. It may hold the key to investor sentiment. The big pandemic winner reported earnings today. It beat on the top and bottom line, raised its full year guidance, but the stock sliding more than 7% at the lows, now down about 4%. Joining me now is Brian Nagel. He is growth, consumer, and e-commerce analyst at Oppenheimer. Brian, actually, so is it a good thing that Tractor Supply is lower? Because if this was a, what should we call it, a shutdown trade, shouldn't it be ascendant?
Well, look, Kelly, I think your opening is perfect. I mean, Tractor Supply, in my mind, the action in Tractor Supply tells us a lot about the sentiment around consumer and retail stocks. And look, what I think is happening right now is there's very much a tug of war. Okay, so as you've been talking about, and I mean, pretty much every guest on CNBC today has been talking about all these renewed or heightened concerns of the Delta variant. So what that would mean is, some of these COVID winners, like a Tractor Supply, like a Home Depot, may have, their winning streaks, so to say, may be elongated, which, look, there's probably some truth to that. Okay, I'm by no means a COVID expert, but, there will be some truth to that to the extent that the pandemic persists. But I think what's happening is, and I think correctly, the market is saying that the next major move will be reopening. And we've already got some taste of that. So these really big COVID winners like Tractor Supply, despite good results, despite now percolating, Delta concerns, are still moving lower on good results as the market starts to look towards a more significant or complete reopening.
So basically, if I were watching all this and I wanted to bet on, let's say a fourth wave of COVID that sends the U.S. back into a version of the economic downturn that we've experienced in the past, then I should buy stocks like Tractor Supply. But if I think the reopening will continue despite all of this, then I would want to be a seller here. Is that right?
That's correct. That's correct. Right. I think there's a nuance in there as well that, again, even if it's extraordinarily fluid at this point, but even if the economy goes into more of a lockdown type mode, I just don't think you'll see the benefit in stocks like Tractor Supply and others, because like I think the market is focusing on reopening, but also another really key ingredient here is these comparisons. So you look at Tractor Supply, their business, they had a great report today. That company's managing really well. But one of the reasons we're seeing a slowdown in their results is that we're now starting to cycle past these really difficult comparisons. And so those difficult comparisons will muddle these results, even if this, the pandemic or the effects of the pandemic can persist.
Right. So even a company like especially for a company like Tractor Supply, it's going to be a long time before they're kind of in a normal environment where the only reason we're up 3% year on year or something like that. And we're talking about how they're going to increase margins. So let's talk about the rest of the space and some of the names that are, especially geared towards the pandemic trade. I don't know which of these you cover, but I think of Peloton, even a name like Lululemon. I mean, we mentioned Macy's, for example. Would you separate these out into the kind of, shutdown and reopening baskets at this point? Or like you were saying earlier, do you think that the retail sector largely is saying there won't be any more shutdowns? You can own these stocks. They just still have difficult comps in some cases.
Well, look, I think it's very mixed. Okay, so my coverage universe is much more skewed towards companies that are COVID winners. Now, I do cover the athleisure names, so like Nike and Lululemon, and I think those companies are very well positioned to capitalize upon a reopening. And we've seen that in some of the results lately. Nike had an absolutely fantastic report a few weeks ago, and again, I think that to a certain extent is a reflection of the reopening. So I expect over time that to continue. Clothing retailers, I don't cover many of them, but I would say generally speaking, those are viewed as within the retail space as reopening. The area where I'd be concerned with, and these are the names I've downgraded a lot over the past several months, would be housing. So Home Depot, Tractor Supply, we've been talking about, a company like Williams-Sonoma, Best Buy. All these companies, they're very well-run companies. And there will be an opportunity, in my mind, to buy these stocks once we get past this COVID noise. But right now, we're in the period, putting aside the Delta concerns now, but we're in the period where we're coming out of COVID, and we're starting to contend with these really difficult comparisons as we cycle past what was, for most of these companies, a fantastic 2020 and early 2021.
Shepard Smith here. Thanks for watching CNBC on YouTube.